Greetings, Jedi traders. David here of TradingFibs.com to bring you the market outlook and recap for the week ending April 1st, 2016. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. Support your knowledge in the market. See what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Wow, what a week it was. Actually, 2 weeks, a little bit lower volume with March rolling out. Janet yelling on the horn, lifting the markets, and end of the month. You never know what's going to happen any day, so leave the bias at the door. Trade the charts that's in front of you. Let's take a look at a quick recap and what and where we are technically in the market on the major indices. By the way, I want to go ahead and shout out to StockTwits here, some of the posts that I do every day that you can also capture in my blog. Every trading session focus, as we had traded in week 12 on the ES. In week 13 we went to the ES, NQ, and YM. What a great week it was, both Tuesday and Fridays, as market just gave us a nice lift there. As you can see, price action here. Let's go ahead and zoom in here a little bit so you can see some of that wonderful move there on the market, as a couple of entries here on the NQ to the get-go, and not able to make anything until eventually all four charts in the green. That's right, all four charts in the green, all the way up to the H5 level. What a move to 45.0575 to close out the week. It was on the ES here, same picture, not able to get up on the YM, but learning to remain in the trend with the 5144, just as we have on a 4-hour chart, to keep you on the intraday basis. And many traders questioning, is this the top? Is this the top? And then all of a sudden, what do? Afternoon action. That's right, afternoon action. Let's go ahead and zoom out on that. On all three major indices here, you can see the ES, NQ, and YM AD line pushing above 750, and there we went again to close out the session. What an end to the week. Let's go ahead and take a look at the daily gaps. As price action here on the TF, opening up at 1064.6, closing out around 1108.7. Why do we look at these charts on an intraday basis? Is knowing that if the technical momentum on the bigger picture followed by the intraday, again, at the end of the day, this is just another level on the chart. But open gaps do eventually get closed. We do have open gaps downside. We have them upside. Right now, the trend on a pullback here on the TF, as we'll look on the bigger picture here in a little bit, but price action still moving upside, and what a week it was on the TF Russell. Take a look at the YM over the last week, 17,446, closing up here at 17,708, a little bit of a rise. Again, the last couple of weeks of March, we were chopping up a little bit, but finally got a rise with the new month. I know you were thinking in your head, April is a down month, and look what it did to you. Well, month's not over, so we don't know. 15,838 is the line downside. Can we go get it? Well, we'll take a look at the big picture here in a little bit, but as the market action, I don't have any open gaps up above, but I do have some highs from 2015 sitting up here. Then eventually the YM, if we can continue upside in this trend, we'll take a look on the 4-hour chart and take a look at that here in a little bit. NQ, 2 open gaps upside. If the momentum is to continue upside on the NQ, I can guarantee you we'll go hit those open gaps eventually. I can't tell you when that will happen. I can tell you it will only happen. But again, I know you're not going to like this. 40.17 downside on the NQ. Open gap sitting down there from mid-February will be hit eventually. Daily ES, price action, no open gaps upside. 1860.50 downside is the open gap, as the price action opened at 2031.25 for the week. 2065.50 upside again, just like the YMNQ, pushing up to some of those 2015 highs. Question is where do we stop? Well, first line in the sand. That's right, price action on Friday came up to that end of the 2015 year right there, and then we know price action came downside. So who knows what you're thinking? Get that thought out of your head. Just trade the charts in front of you. Let's take a look at the euro. Euro been chopping at the lows for a while here. Open gap downside at 1.06. Nice rise for the week here on the euro price action after coming down. Again, open gaps, business always take care of, but we do have one all the way downside. The 6E will eventually come back down and take care of whole business. CL crude 39.70, closing downside 37.84 is about the next open gap. But again, we have open gaps to the upside 46 and even as high as, yep, that's right, 64.74. I don't think we're going up there as of yet, but I can see if crude can turn itself around here on a 4-hour chart and a T3 moving average, will come up there and settle maybe around that 46, closing out that gap from December 2015. Last chart, it is the gold. Gold with daily gaps. Open gaps is really where I'm looking, focusing on gold, but I love the fact that gold takes care of business. You have a nice gap down. Again, just looking at regular trading hours here in mid-March, open gap downside, gold, couple days across, and then what does it do? Bang, right to the upside, closes out the gap, and then shuffles around. So again, here with a weekly opening price 12.19.10 and closing just upside, I like to see gold come up and close out Thursday's gap from Thursday's session. Looking at the volume profile, always focusing on the VPOC, volume point of control line here in the gray-white, 1132.6 on the TF, 17.546 on the YM. Looking all the way across the board, CL crude with a 600-day point of control all the way upside. Again, we're looking at the range on any given day here. You can take a look. Let's take a look at the ES here. It's price action on the ES. Represented by the orange is a 70% of any day's trading point of control, where most of the volume on any given day is. And again, I say this each week in my wrap-up. Whether you use this as a trading tool or as an intraday technique to enable yourself to take, whether it's the long or the short, that's up to you. Some great ancillary resources, Dalton Stodmeyer out there, even shadowtrader.net. But as an intraday basis, I look at the points of control as a line in the sand, like a daily gap. If price action is moving in that direction and it's sticking right out there, I see that as a magnet, and I'm going to stay in the trend. I'm going to stay in the trend with my HA bars, Heiken Ashi bars, and still ride it just like you saw in those first charts that I shared with you today. So points of control, key lines in the sand. As we can see up here, 2063, that's exactly where ES settled around on Friday. So I'm looking for a little bit of settlement here perhaps, and if we continue back upside, then we got some lines that we can get upside. And what I mean about that is either points of control or open gaps or perhaps Fibonacci levels, as we do each day, the intraday Fibonacci levels. But whether you're an intraday or an options trader, or whether you are a long-term holder, my long-term and my intraday charts can assist you in getting into those setups or those trades. So volume points of control, again, you should have those on your chart. Use them intraday, use them long-term, but again, watch for those points of control like we see on the DAX here down at 98.07, closing it out for the week. Again, I love to see crude come back upside to 46, but it's going to take a little bit of a shift in the 4-hour chart, as we'll see here in just a bit. Let's jump into long-term ES for the market outlook for the week. Right now, the technical momentum, I can't sit here and tell you for the next 10 minutes that price action is going in that direction. I can tell you on an intraday basis if the probability is there, but on the bigger picture, I always like to look for the pullback. That's exactly what we have going on here on the ES. Is price action for the majority of the week was downside. Gave a lift there on Friday. We have a crossover in trend. We have a 4-hour chart, which is primarily 50 above 144. The T3 moving averages crossing back upside. That will continue the trend that's lifting the daily here and the weekly. Let's take a look at the Fibonacci as price action coming back upside above the 50, above the 200, holding upside. If this is the high, if the ES is at the high from last December, and price action starts to pull back, I will watch the Fibonacci lines. I will watch the 200 period moving average, 50 period moving average, but it has nothing to do with an intraday setup. Always ready in both directions. But on the bigger picture, I'll look for those key lines, including the 50 here at 2042.50 and the 144, a Fibonacci number 2014-63. That's a 144 EMA. So if I was looking for a long entry, we're starting to see that again as a pullback from Friday's price action. Take a look at the NQ. We've seen it all upside. NQ, we know if we go back to our daily gaps on the NQ, if we go to volume profile, again, coming here to the NQ, you can see the price action, the open gaps up here, 45, 80, 50, 46, 43, 50. The probability of running it up there and closing those out makes that probability even better, as the weekly and the dailies are all in the green here on the right. The T3 moving averages crossing over. Again, the entry was back here on Friday on a 50-tick range chart as price action came down to the 50, never got that boost up, never broke down, from the 50-period moving average even the previous week. So showing some strong support up here. So whether you're trading the ETF or a stock, maybe perhaps on the NASDAQ index, you're seeing some major movement here. Again, not looking for the pullback, looking for the fib extension. If you line it up here, we are above the 200. We are above the 50. I see the market continuing up here, always ready for a pullback, but 100% extension lining up with that end of the year 2015. So if price action on the 4-hour chart and on the T3 moving averages on a 50-tick range chart matches up with the intraday, I could see the price action on the NQ coming back up here to at least the 100% Fibonacci line. Let's jump over to the YM 50-tick range chart, all in the green as the NQ. Again, finding that support on a 50-tick range chart on a 4-hour chart, 50 above the 144. Price action finding that support, continues to keep that price momentum, that technical momentum in the green daily and the weekly. And if we jump over to the Fibonacci lines, price action holding above the 50 and the 200. If for any reason the YM, this is the high, just as we had back from the end of December, and price action continues the downside, I'll look at it in the same way I'm looking at the ES, as price action. Remember, we talked about daily gaps. Throw that in there. You got to go back to the daily gap and ask yourself on the YM, do I have any daily gaps upside? Nope, but I have them downside, 15,838. So you got to be ready in both directions. But again, if we're headed upside, we'll just continue to redraw the fib until we have a retrace to at least one of these levels. Taking a look at the long-term TF, again, a little, besides those three indices, it was the TF coming back downside, pulling back here, price action crossing back downside on the T3 moving average in the red here. Once I get the 534 in the red, then I've got to confirm short-term. If the price action, because we're pretty strong to the upside, is going to continue upside, then I would look for the TF Russell to be in a solid body tail up on a Heikin-Ashi bar. I know the 50 to be above the 144, but you got to love this 4-hour chart. So anything that's following the TF here on an ETF or any stock here, finding the support at the 144, price pulls up to the 50. I would look for the breakout of the 50. You had that there here on March 29th. TF Russell upside put you in the trade on the 50-tick range chart. Boy, what a nice move. And again, TF Russell here using a Fibonacci from the upside down. We just broke the 61.8 here on the last 2 days, the end of the month and on the first day of April. So we're sitting in between that, so 250. So again, using the 4-hour chart, using the 200, we break that 200, then that's TF Russell headed upside. But right now, the technical momentum in a pullback, watch for the support at the 50 and the 144. And if we're going to continue upside, we do. If not, downside, look for those daily gaps to eventually be filled. Following up with the euro here, 6E. Again, pullback on the euro, but again, we've been in a pretty good, strong trend to the upside. Monthly, one of the only major indices to following suit back upside. Again, if you look back at the TF and the YM and NQ and ES, it's taken a while. Let's just jump over back to the ES for a moment. You can see that the monthly chart for the most of the half of 2015 has been in the red, and now finally we're coming back upside. But long-term euro here, price action been holding upside on the monthly, weekly, and daily upside. Taking a look at the Fibonacci, if we go back some time, you really go back, look at that euro. I mean, really sitting at the lows and chopping down here on a 200-period moving averages, price action now above it. We got some key lines up here around 1.15, 1.17. Again, recent highs before price action pull back. So we'll look for price action to reach those, retest them. And again, match it up with your daily gaps, match it up with any Fibonacci lines. But it's the intraday setup. But I got to love that 4-hour chart like I do every week, guys, to put you in the trade to the long, whether you're trading the ETF or anything that's following the euro. Let's wrap up with the last two. Gold looking the upside here. What a move on Friday. Price action now to the downside on the gold on the pullback 4-hour chart. You can see for the most part of the week, last week of March, beginning of April here, price action having a challenging time as the stock's been rolling up. Gold here we can see has been for the last 2 months on a roll up, actually 3 months almost. On a daily has been coming downside volatility. Again, weekly still holding upside, so kind of a indecision time on gold, but going to have to see gold break above the 50-144 and the T3 moving averages. You can see for the most part technical momentum on the gold to the downside. If you're looking to short gold in any way, I would wait for the T3 moving averages on a 50 tick to come back downside. That will follow through on the 4-hour chart. Match that up with the daily gaps and volume profile, and you got yourself a nice short entry. Again, what I like about the daily here is gold, though, did tap the 50 period, holding well above the 200. Again, Fibonacci draw pretty much hanging around the 23% retracement. And last but not least, the crude. Crude is heading downside again. T3 moving averages 50 below the 144. On a monthly, we know that the bias has been, excuse me, not bias, but technical momentum to the downside. On the daily, we've been now shifted downside. Not a good sign that we might go back up and get that 46. I want to see that crude come back up above, but I'm watching that 50-144. As long as the T3 moving averages have shifted downside in the 50, almost about to close 144, you have to take the momentum with crude to the downside, and that might be where we're at. But what I'm going to look for on the crude is the 50% Fibonacci line. I'm going to be watching the 50 period moving average as well as 61.8. If I break that 61.8, I know I've broken trend, which will now confirm that T3 moving average and the 51.44. When again was the better entry on the crude to the downside? Well, you would have had an entry around here, around 38. Got a little bit of lift to 38.92, but here's been the intraday setup on the T3 moving average and to the downside. All right, looking ahead this week as we roll into April, we have Beige Book out next week. Again, you got your weeks filled up. This is finishing out last week, so let's jump into April as we can see the market just being plastered by, that's right, Fed speakers throughout the week. Always watching out for the EIA. FOMC minutes on Wednesday should make for some exciting trading. Jobless claims. Watch for Janet Yellen speaking on Thursday. Watch your global trade, global news as well. Please make sure you check out my website, tradingfibs.com, the market outlook each week, where I have the video posted, including my outlook for the week ahead on both the market cap leaders and the ETFs as well as the futures. One supplement I've been adding recently is the weekly supplemental technical, a document or a supplemental in progress where I run through the market cap leaders, give you a small picture of where technical momentum is, both on a daily and a weekly, and where I believe the technical momentum is. Always looking for a pullback for a possible entry to the upside. That concludes an insight in the state of the indices. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My trading mantra, one simple strategy, any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at TradingFibs, and as always, I leave the crystal ball to the experts. I only trade what's in front of me and on my charts. I always leave my bias at the door when trading. Have yourself a Blue Zone weekend. Good day, good night, and good trading.